Yeah, good morning, everyone. Uh, Today we'll talk more about GST than the changes in which has happened and that will drive the market today. So if we see the overall what is done by the government is quite positive, and the focus has shifted from investment to consumer demand revival. Overall, it seems like they had said that it will be more of a they will be losing revenue. Government will be losing revenue of around 48,000 crores on the base of FY24. So if we see current year, quite possible they may be losing around 60,000 crores of revenue. So it's more of a like a boost to economy, or they are supporting the economy through fiscal expansion of fiscal deficit. So that will act as positive for the company in the current circumstances. Specifically to the sectors, the major beneficiaries are FMCG, auto, hotels, and a lot of consumption item has been given favor with reduction of the duties on them. So if we see the specific sectors like uh, we had seen in FMCG, lot of items has been reduced to duty has been reduced to 5%, and that will have a positive impact on the demand side, though the companies will pass it on to the customers. Benefit of the same will be passed on to the customers, but that will help in reviving the demand. Like footwear had seen the GST reduction of the pair prices of 2,500 and below, then the GST has come down from 12% to 5%, and uh, from 18% to 5%, depending on the category. So that now any footwear which is less than 2,500 will be taxed at 5%. So that will act as demand driver for Bata, Metro, Campus. Then cement also, there is a reduction in duty from 28 to 18%. So that will directly help construction companies and infra company to benefit from that. And there is also reduction in the sand, lime, bricks, stone, granite from 12% to 5%. So that will also support the uh, construction. That will also support the construction industries. So all the companies in construction industries will is likely to benefit, including real estate. Then health insurance also duty has been reduced from 18% to nil. So that will have a direct benefit to the consumers who is taking life insurance and health insurance. Similarly, on the major side, uh, electrical appliances, there is a reduction of duty from 28 to 18%. So that can have a demand driver for AC companies or even the refrigerator, TV, and all. So Voltas, Blue Star, Havells, all these companies are likely to benefit. Uh, then in a major FMCG, if we see companies like Colgate, HUL, Britannia, Nestle, Marico, all these are likely to benefit. On the other hand, there is an increase in duty on the seen item, that is cigarette and all. So where the duty has been increased from 40% plus compensation cess from 28% plus cess. So that will act as negative for ITC. Uh, Textile also, there is a reduction in duty from 18 or 12% to 5%. So that will have a direct benefit. Specifically in this, retail chains are likely to benefit as the threshold amount limit has been increased from 100,000 rupees to 2,500 for 5% GST. So companies like Trent, Aditya Birla Life, and Raymond's are likely to benefit. Hotel also rate for room rent of 7,500 has been reduced from 12 to 5%, so that can act as beneficial for them. QSR companies are also likely to benefit as they were coming under 5% GST without compensations, and now the duties on various item has been reduced, so that can act as benefit for QSR companies as they were anyhow not getting compensation, and now the price of the input has come down because of the GST reduction. So in that, Jubilant Food, Devyani and all will be major beneficiary. So overall seems a good boost to the economy and consumptions. Though it is applicable from 22nd, so the major sales can be pushed to uh, later half of or after 22nd in September month, but benefit will start coming in from there. So from next quarter, the major benefit will be seen of all these steps which has been taken by the government. So overall positive for economy and that should drive the market also. I'll request technical team to take up from here.
Thank you, sir. Good morning, everyone. So, yesterday in Nifty, we saw that it closed about 24,700 mark, which is a slightly good sign. But the Tuesday's high, which is of 24,754, will strongly act as a hurdle to cross the index. And thereafter, if it breaks above that level, about 24,750, it could push the market towards 24,850 and 25,000 mark. Alongside the supported optimistic view around the GST Council meeting, so the index remains slightly positive throughout the uh, week or so. Technically, the index also met the resistance at around 100 DMM, where it was seen closing twice yesterday and day before yesterday below that. So that would also act as an hurdle. But on the positive side, the momentum indicator RSI was also seen trading above its mean level of 50 alongside rising volume. So that's a positive sign for the Nifty as well. So on the intraday basis, the index is seen to open on a gap down note, supported by the strength in banking and metal counters, where we can likely witness positive move throughout the day. The immediate resistance would act around 24,800 levels. If further closing is given upside, it could go around till 24,870 and 24,940 mark. On the other side, the support would act on 24,840 levels. Below that, it would go much more until 24,500, 24,500. On the Bank Nifty side, Bank Nifty stayed on the consolidation phase. And it still continued, although it gave a positive closing yesterday. The immediate resistance lies at around 54,600 levels on the upside. If closing is given above that, we can expect further rise until 24,840 levels, and it could go more until 55,000 psychological mark. The immediate support lies at around 54,130 levels, and if it closes below that, it could further tumble down below 53,870 levels. So coming to the stock specific, we have chosen Glenmark. It has given a good positive breakout from its bullish black pattern. An ideal entry could be at around 2004 or 2005 level, with a stop loss at around 1950, with the target to look for around 2135, 2140 levels. Another stock is Titan. It has given a good consolidation break from its consolidation zone with good rising volumes. We can expect a further up move. An ideal entry point would be around 3690, 3695 levels, with a stop loss at around 3620, with the target will be looking at 3840, 3850 levels. So that's all from the technical side. I'm going to forward the call to the derivative.
Yeah, thank you. Good morning, everyone. So, on the derivatives front, as we are seeing that in yesterday's session, the strength was very much good on the oral market front, where the major support came out from the metal front. While in today's session, also we are seeing that the gift is likely to open above 100 points. So, gap up open is likely possible in the market at this current scenario. While due to the yesterday's positive closing and positive strength, we are seeing that the put order positions got added up sharply sharply between the range of 24,500 to 24,700 mark. Currently on the upside, the next resistance for the Nifty lies at 25,000 level, where we are seeing that the highest call rate positions are holding strongly on the weekly basis and on the monthly basis. Once the Nifty comes in the range of 25,000 to 25,200 range, again we will witness some range bound scenario at that point of time. The fresh buying opportunity which will be witnessed on the overall market front will be on the future levels at 25,200 level and the spot level at 25,000 mark. Once the closes of this level comes, then we will witness a stable buying in the market. Till that point of time, the market is having strength on the supportive down base where the support lies at 24,500 level. Till that time, Nifty is not going below 24,500 level. Till that point of time, market strength is likely to show some positive momentum while going ahead. While in today's session also we have seen that PCROI yesterday closed at 1.21 level. It has closed at this level after many time, mostly around after 4 to 5 weeks. We are seeing that the PCR closed at 1.21 level. This is a positive sign where we are seeing that the put writer positions are healthier against the call writer positions, and on the upside we are expecting PCR to go towards the 1.45 to 1.50 levels, due to which around more 150 200 points momentum will be gained from this PCROI numbers. While on the stock specific and sector specific front, a counter that looks positive in today's session will be Tata Steel, Tata Motors, SRF, and Blue Star looks positive. So that's it from the front. Thank you.
Yeah. Good morning, everyone. On the news front, Swiggy has raised its platform fee for food delivery from earlier 12 rupees to now 15 rupees in select regions, since it is experiencing good increase in demand. And this was an expected line after the peer company Eternal also had taken this hike. So that's positive for this industry. That's it from me. Thank you.
Good morning. We attended the con call of JSW Cement yesterday. A few key highlights from the call. They have achieved industry low clinker factor at 51% and clinker utilization at 87%. The EBITDA margin guidance is 1,150 to 1,200 per ton. They have a cost reduction target of 400 per ton over the 2 years. 50% is already achieved via renewable power, logistics, and lead distance reduction. Their net debt to EBITDA targeted at 2 to 2.5 times in the next few years, which is 4.3 times currently. The cement demand in India is expected to grow at 6.5 to 7.5% in FY26 with a strong support from infra spending and favorable monsoon. JSW Cement aims to outperform industry growth and cross 15.5 million tons volume in FY26. Their capacity expansion roadmap is to reach 41.85 million tons per annum grinding capacity and 13.04 metric tons per annum clinker capacity by 2028. GGBS mix will gradually decline from 40% in FY26 to 33 to 35% by FY28, though absolute GGBS volumes will rise. We are long-term positive on the stock. Thank you. That's all from us. Commodity team can take the call forward.
Yeah, thank you very much. Good morning, everyone. So in today's session, gold silver prices have opened gap down, and any pullback one can initiate a sell. So selling gold around 1,06,200 is recommended with a stop loss of 1,06,700, and on downside it can test 1 lakh 5050, 5200. Similarly, silver also expected to test 1 lakh 23,000, 1 lakh 22,000 on downside. So any pullback around 1 lakh 24,500, one can initiate a sell with a stop loss of 1 lakh 26,000. And in metals too, copper expected to test um, 898. So all in all, it could be trading in a range from 905 to um, 898. So trading in this range is recommended. However, zinc, one can initiate a sell with a stop loss of 276 on downside, expected to test to 270 to 271. And crude oil too can test 55 50, 55 70. If prices are holding 55 50, then should initiate a buy for a pullback, strictly maintaining a stop loss of 5500. And again upside, 56 50, 5700 are the levels where one can book profit. Also 5700 is the resistance area where traders can initiate a sell, maintaining a stop loss of 5717. And in natural gas, expecting prices to test 275 to 80 on upside. So any move around 267 to 66, one can initiate a buy with a stop loss of 255. As long as prices are holding about 255, we expect positive momentum to continue, and prices are likely to test 280 to 85 on higher end. So buy on dips in natural gas is recommended. That's it from us. Thank you very much.